Hey, good afternoon. This is Clark Neighbors with BIS Commodities, Cedar Rapids, Iowa, with the market in review for the week ending October 23rd, 2015. As far as the grains are concerned, fairly quiet continuation to a flat market that we've seen over the last several months. Looking at the changes for this week, corn basically up 3 cents, beans down 3 cents, wheat 2 cents lower. For the month of October thus far, 3.5 weeks in, corn is down 8 cents, beans are up 3, wheat's down 22 cents. So again, fairly quiet market. 2-3 things we're going to visit about today. One will be the U.S. dollar impact we've had with that. Also, we're going to talk some about the lack of movement, the impact that's having on spreads and basis in the Midwest, and then lastly talk some on harvest movement. Now, this afternoon, Friday afternoon, the Commitment Traders Report come out. Beans fairly neutral as far as the managed money. Corn took 60,000 contracts out of the net long corn position, now long only 32,000 corn. So in essence, that market's fairly flat. The traders are still short wheat. Again, what I mentioned earlier, flat market over the last 3 months as far as the grain's concerned. During this time frame, corn has had about a 40-cent trading range, roughly $3.60 to $4 on December corn. Lo and behold, here we're right at about $3.80 here this afternoon. Beans have had about a 60-cent trading range during that same time frame. Fairly flat market, a market that seems to struggle to go lower, a market that seems to fail anytime we see some sort of weakness, or firmness or rallies in this market. So as harvest winds down, and harvest progress, depending on weather, should quickly fade here over the next few weeks. Progress come end of the month, give or take Halloween, there's not going to be a lot of crops left to come out of the Midwest. And having said that, we have areas that are challenged with logistics, with space. We're seeing, especially in the northwestern corn belt, a fair amount of corn and to some degree beans going on the ground just to cover logistical situations. And as we've talked about before, the intent or the need for this market is to take where the crop is and take it where the crop is not. This week was interesting as we started to see in the eastern corn belt with corn harvest winding down, some very strong basis levels starting to come into play, with transportation costs backing away a little bit on both barge freight and rail, which may come into play in these logistics as we go down the road. But when you're trading 20, 25, 30 plus over into the eastern corn belt, the trick is then to find where harvest is complete, I should say, and we're not seeing a lot of local movement, is to see the situation where from Minnesota, northwest Iowa, South Dakota, and places like that where there's excess supply, right, is to try to take that and move that via rail into the eastern market. And we should start to see that happen a little more of a pattern program as we get into November. It's a little early yet as we're winding down harvest, but that is going to be the function of the market for quite a bit of 2015-2016 crop year. As I mentioned, harvest progress winding down, beans virtually complete, winding down on the corn. It still looks and feels like conversations we hear in the Midwest that yields are maybe a little larger than what is currently posted by the USDA as we've gotten further along into harvest. We'll see on the November report if that's reflected. Even if it is, it may have very little or any impact on the board structure going forward. Keep in mind there's a hurricane coming into Mexico this weekend. It's supposed to move up into the southern part of the U.S. We'll see if that has any impact on harvest progress. Probably not, but it may have some impact on the wheat or the cotton crops as we go along. Getting back to this movement situation, Wednesday of this week, we saw some tightening of the corn spreads. That was kind of a main talking point. The December-March carrier contango went under 10 cents for the first time since this summer. The market pulled some of this carry out of the market based on the strong basis in the East, having some impact on values in the delivery market going forward. And I think that bears watching for corn. Now, Thursday we came in with just horrible corn export numbers. It kind of put a little bit of hesitancy on those spreads, at least for a day. Now here again on Friday, those spreads feel a touch firmer. Bean spreads, with delivery against the November a week away, they have tightened up again, which is just common theme for November or for soybeans over the last several delivery periods. The last thing I want to speak on is the U.S. dollar, which we've seen some strength in the U.S. dollar again this week based on more dovish talk out of the Eurozone. China today lowering interest rates, I think for the 6th time this year. So this easy money situation that we're seeing around the world continues to show that the dollar is the place to be. So the dollar has seen some strength. Now keep in mind, if you look at the dollar today versus our highs here earlier this year, we're down a fair amount, but we're quite a bit higher than we were a year ago. In fact, with the dollar right now in the chopping in the mid upper 90s, keep in mind the 5-year average in the dollar's around 80. So with that in mind, the dollar's quite a bit higher than what we've seen over the past several years, especially during some of these high commodity markets. And that's having some major impact on any commodity traded overseas from an export point of view, whether it's metals, energies, and to put it closer to home, when you look at least this year what's going on with exports, corn as well documented, we're down hard so far this year versus even a year ago, down around 38% right now versus a year ago in sales. Beans are trying to catch up, but we're still down a little over 20% for the year. Cattle exports are down 12% this year versus a year ago, while beef imports are up 19%. So the U.S. dollar is fairly key ingredient in the macro side of this market going forward. If you have any questions on these or any other markets, give us a call at BIS Commodities. Phone number is 800-373-2525 or biscommodities.com. With that, have a great weekend.